Good morning, everybody. This is Alex, Senior Account Executive at GDMFX with your European session outlook. We'll start with the North American markets. The dollar turned lower in mid-afternoon trade Friday as investors decided that the March jobs report, while better than expected on its surface, likely wouldn't change the Federal Reserve's plan for raising interest rates. The U.S. economy created 215,000 jobs in March, which is 10,000 better than expected according to the Labor Department. Of particular importance was a reading on average hourly wages, which grew 0.3% in March after declining 0.1% in February. The number showed U.S. inflation is on track to continue rising. However, the jobs report wasn't entirely free of blemish. The unemployment rate crept higher to 5% from 4.9% in the prior month, due to a rise in participation. The other events from Friday were the ISM manufacturing PMI 1.1 better than expected at 51.8, and the ISM prices paid 9.5 better than expected at 51.5. Average weekly hours 0.1 worse than expected. Labor force participation rate 0.1% higher than previous at 63%. Market manufacturing PMI as expected at 51.15. Construction spending month on month 1.5% worse than expected at negative 0.5%. And from Canada, RBC manufacturing PMI 2.1 points higher than previous. The Dow was 10 points up, the Nasdaq 51 points up, and the DXY remains at the same level, 94.61. The USD CAD ended sideways but had a 175 pips range. The USD Swiss franc was 40 pips down, and USD JPY 100 pips down. Today's events, Tier 1 event from Canada, Bank of Canada Governor Poloz Speech, Tier 2, Bank of Canada Business Outlook Survey, Factory Orders month on month, and Labor Market Conditions Index. The Fed will remain in the spotlight this week with the Fed minutes from the March meeting due for release on Wednesday. Alright, on to the European markets. The euro finished out the quarter on mostly strong footing, rallying further against recently embattled currencies like the British pound and the US dollar. On Friday, we had the market manufacturing PMI from the Eurozone coming out 0.2 points better than expected at 51.6. Throughout the week, we do have quite a few important events which will likely move the euro. Today, we have the PPI month-on-month, year-on-year. On Wednesday, we have the non-monetary policies ECB meeting. Thursday, ECB monetary policy meeting accounts, and ECB's Mario Draghi speech. The new measures of the ECB have taken effect on April 1st, last Friday. Alright, on to the UK markets. On Friday, we had the market manufacturing PMI came out 0.2 worse than expected at 51. Last week, the sterling reached a 16-month low versus the euro and an overall bearish performance against its major pairs. On Friday, data showed that the manufacturing sector underperformed. This added to the troubling current account data from Thursday, as investors sold the pound heavily versus all major pairs at the end of the week. As a result, the cable slid 1.1%, and the overall decline of the pound versus its major rivals was in the range of 2.7%. Data showed that the UK economy is still largely dependent on external financing, at least in the manufacturing field. Poor manufacturing added to the ongoing concerns over the Brexit referendum and the low chance for an interest rate hike by the Bank of England this year, which drove sterling even lower. The FTSE 100 closed at 6,094 on Friday. The 10-year gilt yield closed at 1.45% on Friday. The movements on the chart on Friday, as mentioned, were huge. They showed big movements downwards for the pound. The pound against the dollar, 140 pips down. Against JPY, 290 pips down. Against Australian dollar, 230 pips down. Against the loonie, 150 pips down. Against the New Zealand dollar, 180 pips down. And against the Swiss franc, 205 pips down. The British pound may rebound on the Construction PMI data, which is due today after Friday's sell-off. The other events for this week for the British pound are the NIESR GDP estimate for March, the BRC retail sales monitor, RICS housing price balance, industrial production month on month, the manufacturing production month on month, the industrial production year on year, and the manufacturing production year on year. All of this is due this week. All right, on to the Asian and the Pacific markets. Today is actually a holiday in China, and thus the banks will not be working, they'll be closed. In Japan, according to the latest Japanese corporate price expectation survey, Japan's companies see falling inflation expectations, which raised doubts whether the Bank of Japan's stimulus measures are yielding the expected results. The sentiment-sensitive commodity bloc currencies weakened, and the safety-linked Japanese yen traded higher as risk appetite soured in overnight trade. Interestingly, the moves appeared to be ignored by the equities space, with Asian bourses relatively little changed by around midday in Tokyo and Sydney. The Australian dollar underperformed following a disappointing retail sales report. Receipts registered flat in February, falling short of expectations, calling for a 0.4% increase. The year-on-year growth rate dropped to 3.3%, the lowest since September 2013. The currency tracked downward parallel to a drop in Australian front-end bond yields, suggesting the report inspired Royal Bank of Australia rate cut bets. Easing is not expected at this week's policy meeting, however. Alright, last section for the day. Commodities oil futures fell sharply on Friday after the Saudi deputy crown prince said the kingdom will not cap output unless Iran and other major producers do so, casting doubts over whether a highly awaited production freeze will happen. Saudi Arabia is getting ready for the twilight of the oil age by creating the world's largest sovereign wealth fund for the kingdom's most prized assets. They plan a $2 trillion mega fund for post-oil era. Gold prices lost 1% on Friday as upbeat U.S. employment and manufacturing data sparked speculation on the commodity. Gold had a range of $25 on Friday, down to $1,218 now. Silver had a range of 66 cents at $15.02. Crude oil had almost $2 range at $36.33, and natural gas is trading at $1.96 at the moment with a range of 7 cents. Thank you for watching, everyone. This was today's Outlook. I'll see you next time. Goodbye.